Hey, I think we'll just get started now. This space is being recorded, so if someone comes in later, they can always rewind and listen from the start. So yeah, without much further ado, thank you everyone for joining the Twitter space with IDG and Pantera today. We have Will from Pantera and Johanna joining from the IDG side of things. We also, of course, have Eric from our end. They'll be chatting about some very interesting things regarding Web3 trends, some trends within the VC circles themselves, and of course, the Injective Ecosystem Venture Group. So I'll sort of moderate and initiate the conversation and let the speaker sort of take it away. So just for a bit of context, last week we introduced a $150 million initiative. This is meant to accelerate developer adoption across the Injective ecosystem and also the broader Cosmos ecosystem. The effort was joined by some of the best VCs in the space and also best institutions, I would say, Pantera and IDG being two of them, but we also had guys like Jump and Delphi, big sex sort of venture firms such as KuCoin Ventures and Gate Ventures, and also big trading shops such as Flow Traders. So effectively, we want to learn more about what this group will actually do and how it's sort of net beneficial to the burgeoning developer community in the ecosystem. So yeah, I think we can kick off with guest introductions. I know I briefly mentioned their names, but yeah, maybe Joanna, you could go first and then Will can follow.
Yeah, hey guys, it's Johanna here. Really pleasure to jump into today's Twitter space. And yeah, I'm from IDG Capital. And basically, IDG Capital was running Web2 investment for almost 30 years already. And we're actually focusing on the Web3 investment for a very short time, but pretty ambitious on the side. So I was helping within all the blockchain and Web3 related investment, and really happy to be here today with you guys. Really nice to meet you. Yeah, thanks.
Awesome. Thanks. Yeah, thanks, Mirza, for the intro. Yeah, hi guys. I'm Will. I'm on the investment team at Pantera. If for anyone who isn't familiar with Pantera, we've been around as a fund since about 2003. We started as a global macro fund and then pivoted in 2013 to focus exclusively on crypto and blockchain assets. So we've been around in the space for a while. We focus exclusively on crypto, so we consider ourselves to be sort of pretty crypto native. And we'll look at and invest in pretty much anything in the space across all stages. So my personal background is in sort of traditional finance. I have a background in kind of traditional equities investing and also quantitative finance.
Thank you. Yeah, very excited. And of course, we also have our very own Eric. So, Eric, I know most of the audience should probably be familiar, but if you want to give a quick 20-second intro about yourself and Injective, that would also be great.
Hey guys, this is Eric, co-founder and CEO of Injective Labs. So Injective Labs is a core contributor to the Injective ecosystem, and it has products like the Hub, Helix, etc. So I think that's pretty much it.
Yeah, thank you. So yeah, I think it's just let's just get into the meat of it and dive into the initiative itself. So the Injective Venture Initiative will seek to bring a very high level of growth for the developer ecosystem. I think it would be good for everyone to know what is the primary goal of this initiative. What do you guys hope to sort of achieve with it, especially in the current market climate?
Sure, I can start there. Yes, I think for us, we've been excited about Injective as an ecosystem for a while. We're pretty early investors leading the seed round back in 2020. We just want to basically be supporting builders in the Injective ecosystem as best we can. And we're going to be really excited to see any projects that are leveraging some of the core primitives that the Injective team has developed in sort of unique or interesting ways. We're typically more interested in sort of more kind of 0 to 1 improvements than sort of incremental improvements on proven designs in spaces that might be dominated by sort of 1 or 2 incumbent players. But we're pretty excited about DeFi. We're going to talk about some of that in a bit and some of the trends that we're looking at and for 2023. yeah, so cross-chain messaging, swaps, lending, decentralized derivatives, etc. All sort of stuff that we're going to be looking at.
Yeah.
Yeah, for me, I think, yeah, go ahead.
Sorry, Johanna, you go ahead.
Yeah, it's okay. So for me, I think the Injective Labs I actually already know since I was at the Binance Research before. So it's really happy to see today's improvements on all the market cap looks like right now. So it's really exciting to see all about the DeFi's ecosystem collaborating with Injective Labs all the time. So I think Cosmos ecosystem generally is a very ambitious, especially in the 2020, and it's still showing an uptrend until in 2023. So I think Injective Labs it would have the chance to do the interoperability with all the different protocols within the ecosystem and bring much more values together with all the different protocols, especially in the DeFi side. So I think for this program, I'm very excited about to see the potential developer teams and also see the promising community management and also the development within the bigger ecosystem, not only in Cosmos, maybe even larger. So that's it, almost about that.
Yeah, I think one of the most exciting thing about Injective as an ecosystem in general, this trend of sector-specific chains and application-specific chains, is that it kind of breeds a new ground for developers to really flex their muscles. But the downside of this is that a lot of the users and a lot of the existing incumbent players in whatever vertical that you're working with, it's generally very tough for people to wrap their head around, and it requires a little bit of a boost during the 0 to 1 phases for a lot of these projects that are working on extremely innovative ideas to kind of get off the ground and get the kind of recognition and exposure that they deserve. For example, there's a lot of projects on top of Injective working on things that I've never seen before in DeFi. Providing liquidity with very capital efficient mechanisms directly onto the order book, and also different types of fair and transparent applications that allows users to be self-custodial, self-sovereign. And on top of that, there are a lot of hidden kind of primitives that can be extensively utilized to build a lot of really exciting applications. And these applications are typically those that developers on Ethereum, Solana, etc., kind of just shrugs off because they know that it's impossible. And I think now with this initiative and with all the historical efforts, it's really for a lot of these developers to go back and say, hey, it wasn't possible before, but now with the injective infrastructure, et cetera, it's possible. Just to name a few, having the concept of a brokerage account, having an FTX-like margining system, rest in peace, obviously, and a lot of different flexible mechanisms are provably transparent and fair, and most importantly, risk isolated in nature. This is really what DeFi is about. I'd say builders deserve the recognition, and this consortium is there to support them.
Yeah, thank you all around. That was great. I think some of the speakers were sort of alluding to it, but a major theme of the initiative and Injective as a whole is DeFi. So Injective as a chain is sort of optimized for building DeFi applications. Injective provides a number of different modules, such as an order book, options, etc. So essentially, any developer can sort of take some of these modules and create their own application in a matter of days, even. We've been building in the space for quite many years, and the DeFi boom, I would say, started in early 2020 in a way, with market leaders like Compound, Yearn Finance, etc. Since then, we've seen a lot of different iterations of DeFi with different yield farming protocols in 2020, and later more sophisticated protocols, lending protocols, etc. But obviously, many think that starting in 2022, with the general market collapse of CeFi and a lot of the Black Swan events that occurred, such as Terra, Three Arrow, FTX most famously, that DeFi is quote unquote dead. So I would like to sort of push back on that narrative and understand why you guys are still sort of bullish on DeFi as a whole, as a sector, what trends you're sort of seeing in the sector, and what do you hope to see in the future in the industry?
Sure. I could answer this one first. So the first one is actually I think the what happened within the last year, like the black swan within all the DeFi systems, it's not really a bad thing for the whole market. So considering all the regulatory regulations and also the institutional investors, it's actually pushing all the market into a more more structured way. So we should expect the blockchain market to be shaped by the development of the standards from the network itself and also the frameworks for the regulated entities. So today we think that the last year's actually the cryptocurrencies market slightly slowed down compared with the year previous, like 2021, but it's still not going really bad. So compared with also Nasdaq ratio and also the US and global stocks, it still performs okay. I think this is a chance for all the DeFi ecosystem, not only in the way that we have more creative way to make the transparency and also the network building in a more structured way, but also people see some confidence lost in the centralized finance. And it's not really to replace everything at the same time at one time, but it's a chance for everyone to know more about the DeFi, what is DeFi doing, and any kind of the advantage we can bring to the users. It's a chance for everyone to know what we're doing right now. So it's kind of a good thing for all the market we've seen today. And the second thing is for the bullish side, I think after that, the stable coins seeing great chances in the whole general market. So if we wanted to build high quality tokens and also more stable general financial structures within all the DeFi ecosystem, stablecoins really play an important role for all the different positions. So starting from no matter the Uniswap or the Curve, we've seen that the stablecoins always been the first element to trigger everything, events go up or go down. So I think stablecoin this year or even go further will still be a very good competition for all the different parties and how to better adjust and leverage the risk and to take the best use of the stablecoins. It's a major concern and problem for everyone to solve. And we are also targeting for the high quality tokens, not only for the Bitcoin and Ethereum. We are looking for more structured tokenization instead of just pump and dump tokens, altcoins to flush into the market and gone. So I think all these expectations should be developed within this year or the end of this year, because it's going to be more regulated and structured in a more bigger way. Yeah.
Yeah. I guess, yeah, I mean, I don't want to kind of, I'm wary of sort of making the argument to these kinds of questions that all of the blowups from last year were net positives, just because there was a lot of pain in the ecosystem. You know, people got hurt like across the spectrum from big ticket like institutional investors to kind of more kind of less crypto native retail. So I'm not sure like where that shakes out in the long run, but I think in terms of like silver linings, there are definitely quite a few. I think the argument that DeFi is dead is definitely wrong. I think DeFi was incredibly resilient throughout all of this. It was a centralized finance problem primarily all of last year. So I think there's a lot to be said for how DeFi has held up in the face of in the face of all these kind of CeFi and CDFi blow ups. So I think that's one point. In terms of trends that we're seeing in the space, I think over the next couple of months in 2023, the FTX thing, other centralized finance blowups could be pretty big tailwinds for DeFi. I'm excited about DEX volumes. I'm excited about decentralized derivatives exchanges. FTX being one of the primary centralized finance derivatives exchanges. Enormous volumes going through there daily before the blow up. Excited to see sort of where that shakes out over the next couple of months. Other things that we're seeing and looking at, I think this one's more of a kind of, I guess, infrastructure DeFi hybrid, but definitely excited to see how the state of the liquid staking market impacts liquidity in the space and post Shanghai. So what I mean by that is ETH is currently around 14% staked in terms of the total network value. Most other L1s are in the kind of 45 to 70% range. So if you go on stakingrewards.com, you can see where all the other L1s stake out. We're pretty sure that post Shanghai, there's going to be a big unlock. People who have been, wary of liquid staking derivative DPEGs that haven't been diving into the space, diving into staking as much as they might have been, we think are going to be much more kind of risk on once withdrawals are officially unlocked. So there's other things that are happening in liquid staking. DVT, which stands for Distributed Validated Technology, is a kind of a risk management protocol. I suggest to the audience to check out Obel Network. We just co-led their Series A round. That is a risk management technology which will significantly de-risk slashing risk. It'll increase validator uptime so people get more staking rewards on average over time. That's another thing that should de-risk staking and encourage people to be staking more. So with that, there's going to be a lot of liquidity that gets unlocked from these liquid staking derivatives as people stake their ETH. And we think that that's going to be a little less shy about finding a home in terms of yield than the current holders of ETH who are sitting on ETH bags generally. So we're kind of curious to see where that lands, where that finds a home. We think there's going to be a lot of competition to kind of get that liquidity, but we're kind of excited to see where it goes. A couple of other points. I'll try and be quick on these. We're excited for real world assets, real world yield. Banks around the world are tightening their credit requirements at the moment in the face of kind of economic uncertainty. I think this is a really good opportunity for DeFi rails to extend into those areas and service some of those companies that are no longer being serviced by kind of traditional finance. There's been a couple of sort of recent catalysts to the space. So Block Tower just introduced the first institutional credit fund into on-chain lending. It's a $220 million fund via MakerDAO and the Centrifuge partnership, I believe. And obviously the rising yields in traditional finance in the real world as a result of the interest rate environment should also be a tailwind to that. So couple of other spaces. We think decentralized options markets have a lot of ground to go. We think that better mobile support here and incentive programs could definitely accelerate the space. But a lot of the tech, a lot of the groundwork has already been done there. So we're going to be watching that space quite closely. And then finally, and I recommend anyone who's interested in the intersection between TradFi legal and regulatory and DeFi to check out our year ahead blockchain letter. You can go to Chia's section. He wrote some really good thoughts on this. But the idea is basically that in DeFi, we've had a little bit too much of a focus on code as law. And the fact is that actually law is law at the end of the day. And Sega, which is one of our portfolio companies, exemplified this by requiring ISDA agreements with all of their market-making counterparts, which basically gave them seniority over all bankruptcy claims and allowed them to get 100% of their funds back from Alameda within about a week of the collapse. We thought the Sega founders' TradFi backgrounds gave them kind of the knowledge base to put these structures in place. And we thought it was just a great example of where kind of leveraging like TradFi legal and regulatory kind of rails can actually be significant, like really beneficial to DeFi, where we typically want to rely more on code, and the focus has been more on kind of having code be doing 100% of the enforcement. Yes, I'll stop there.
Yeah, DeFi definitely is not dead, and it has certainly significantly improved and saw a lot of recent adoption, especially with seasoned industry players for the past few months, as we have witnessed very much firsthand from Injective Labs and from a lot of the ecosystem projects as well. I would say like one of the most intricate issues that we see right now within this space and within like the broader crypto sector is you kind of see kind of this dichotomy of centralized players, migrating their more traditional mindset and their risk appetite into a high growth sector, and kind of creating a lot of waves, getting a lot of attention, and you know, similar to the general traditional financial cycles, uh, create a lot of public collapses as well. And at the end of the day, it's kind of like this saying goes, these violent delights have violent ends. That being said, the unfortunate case for the recent collapses is that the failures are, very much, commingled together. And, it's really at the end of the day, like all the general public that gets significantly hurt by this, along with institutional investors. And the immediate impact of this is that obviously we saw a lot of the institutional investors, de-risking and stuff like that. But we also witnessed more seasoned players and more established institutional investors entering, as a matter of fact, because they saw the opportunity, because they saw that the leverage has been flushed out, because they expect more and more safe practices to be implemented. And this really shines a very, very strong light onto DeFi because it was completely unaffected by all the recent incidents. And basically, with all the market volatility, it has it stood to be extremely resilient against all these market factors. And this is a true test for the DeFi resiliency and kind of like the semi-code is law concept. That being said, I think at the end of the day, a lot of the centralized players just have kind of like this incumbent or inherent advantage because failure in centralized players are heavily delayed and can generally be kind of avoided or championed through if they're lucky. Obviously, for a lot of recent failures, they just happen to face these failures in the wrong market condition. But for DeFi, even the slightest hint of failure and the slightest hint of risk is extremely public, and everyone can react in the most liquid way possible. And this basically creates kind of more reporting or more highlights of DeFi failures, when in reality, CeFi failures are far more often and far more basically damaging. But it's just that people don't know about the damage until it's too late. On the other hand, I would say that there are just a lot of base primitives and general trend of building that people start to, and like all these wonderful developers start to explore to really kind of merge the advantage of the traditional financial infrastructure with the transparent and trustless DeFi kind of properties. And what we're seeing is that one of the biggest pain points around DeFi is capital efficiency. It's the lack of a robust credit system. It's the lack of fungibility of assets, etc. And this really limited the overall liquidity or the effective liquidity that DeFi can bring and the adoption along with it. That being said, the next iteration of DeFi will be kind of really advancing this credit layer and advancing the general kind of mobilization of capital to be able to make like a usable options protocol, derivatives protocol, and a lot of these base primitive to be on par, if not supersede, a centralized financial stack. And that's something that I'm truly looking forward to because in the past cycle, a lot of the DeFi innovations and development has been heavily focused around squeezing as much risk-free yield, quote unquote, as possible. But now, as the market has really, really calmed down during this high interest rate environment and the global macro factor, a lot of these developers are kind of huddling back and looking to build innovative things and understanding that, in order for you to remain competitive, you'd have to put in the work and spend and be patient in building truly innovative stack. And I think us at Injective Labs, we kind of started, during the peak of crypto winter, and kind of understood or have the mindset of, building defensible things, building, highly complex and I would say like highly innovative infrastructure and base layer protocol and applications. And this kind of allowed us to basically be this kind of perfect building ground and be this perfect ecosystem for other aligned builders to join as well.
Thank you, guys. I think there was a lot of amazing alpha there in terms of sectors and DeFi as a whole. So yeah, really appreciate it. And I think generally when I ask this question, I usually get a super bullish take on DeFi. So I'm glad this conversation was way more nuanced to understand what's happening sort of in the macro environment and how that could impact DeFi too. One sort of subsector that was perhaps affected by the CeFi meltdown and also sort of general sentiment change within crypto is venture activity. So one thing that likely most people in the audience have noticed is in the last year and a half or 2 years, there's a frenzy of venture activity, right? With funds being raised left and right, people spinning out and creating their own funds, and on top of that, individuals raising giant sort of capital raises across the board. So a general question a lot of people now are asking is, where is all this money going? Because obviously VCs have a certain fund cycle that they need to deploy the funds within, but it seems like funding has generally just left the system. A lot of the news we see these days is for funding rounds that actually were closed months ago. So is that true? Or is venture sort of currently stopped or sitting on the sidelines, or do you feel like there's still deployments happening? And if so, where is it being deployed exactly?
Sure, yeah, I'm happy to go first on that. So I think you're right, Mirza. There was a bit of a slowdown, sort of pre the holidays, kind of in December, sort of end of November last year. We think that was mostly seasonal, given the uptick that we've seen in activity in the first couple of weeks of this year. We have a good amount of dry powder still as a firm. We're still deploying across, everywhere in crypto. We are being a little bit more selective in general. We're maybe waiting to see a little bit more traction than we were previously. We're happy to be a bit more patient. We're happy to wait for sort of the right company with the right valuation. But we're definitely still actively deploying. We're still actively fundraising. We recently announced that we're launching our fundraising efforts for our next fund, which is called Fund 5. You can read about that on our website. But I think that we have noticed a definite uptick in the first couple of weeks of this year in terms of venture activity, in terms of founders raising. I think the environment can be a little bit more tricky to raise in at the moment, but for really good projects, that is, given the slowdown at the end of last year, there has been kind of a flight to quality, so to speak. So the valuations for some of kind of the more exciting kind of like sort of hotter rounds have still been pretty high, I would say. So yeah, I'll leave it at that.
Yeah, actually, I agree with what Will say, that the investment activity actually shows strong seasonal signals. Because actually, if we compare the data last year and 2021, the total investment amount actually didn't jump a lot. So it's actually slightly increased compared even 2021. The reason why is before all the Black Swan events happened in last year, the first quarter and the early Q2 actually had pretty great investment activity. And we've seen that when the price and the market showing the positive signals, all the investment really active and pouring money to their potential teams and protocols. So I would say that the money is always in the hand. It's just didn't spent as easy as we saw in previous years. And for IDG, actually, we never stopped talking within the teams. We always deploying and chatting with all the potential projects all the time, just kind of slow down considering all the market. And also, we've seen that most teams are transferring from the application side, like the NFT and GameFi's, what happened in the end of the 2021, and transferring from this angle to a more fundamental check. So building DeFi structures and also maybe bridges and security related. So all the security issues happened last year make everyone be more risk alerted, and to know that as long as we want to go to a long way and to hold in the bear market, we need to definitely build ourselves in the more structured way. So I think money is still there. It's just didn't pour into the market as usual or as fast as we expected before.
Yeah, no, I think that was great. I can speak from it from a different context, from the context of someone working at a project. I've definitely felt as though the sentiments are correct here. A lot of my personal friends sort of stopped raising towards the end of last year because they thought the market climate would shift or change. But I think there's been a new sort of order that's been set. I think a lot of people have now realized that, hey, the market will likely not change for a while, or this is the new rule. We won't be able to raise at the ridiculous valuations we were raising at before. So I think the market has sort of humbled a lot of founders recently, especially among people I know, and they're more willing to raise now, starting in January, at more proper valuations that, yeah, were largely inflated across 2021 and even beginning of 2022. So yeah, that hopefully adds some additional color to what I've seen from the other side of things. A big part of this initiative as a whole is to actually connect promising founders and developers with the VCs. A big issue in the space in general, or in VC in general, I would say, is it's a lot about who you know. And warm intros go a long way. Cold reach outs sometimes do not work, often do not work. So the initiative really is designed to diligence founders properly and then match them with venture firms such as Pantera and IDG here that could potentially take the conversation further and potentially even partner with them to help them scale. So yeah, maybe it'd be great to hear from you, Eric. How can sort of builders get in touch? How can they sort of get into the program and meet with some of these amazing institutions?
Yeah, so actually it's very, very easy. You just go on injective.com. There's basically like a tab, and then you can just basically fill out the form and apply there. Mention as much detail as possible about your project, what you're working on. Ideally, attach some demo, some repo link, etc. And basically, like the community can pick it up to do like a first pass and share it with all the consortium members.
Yeah, thanks. Yeah, that was great. I think I'll shift gears a little bit. We've been chatting a lot about DeFi, but an understated sort of category we didn't touch upon yet is interoperability. So there's been a lot of talk about the sector as a whole. Johanna sort of alluded to it earlier as well, with bridge solutions, etc., security being new priorities in the current climate. And it can't be understated that there have been sort of a lot of failures in interoperability, right? Yesterday I was all over Twitter where Wormhole was selected actually as Uniswap's new bridge provider, for example. And there was a huge controversy with Layer 0, etc. But interoperability can extend far beyond bridges themselves. So it'd be great to sort of understand what your take is on the space, where you see it evolving beyond just bridges, and yeah, what it means for the future, where there could be multiple L1s, for example, that could coexist and interoperate with one another.
Yeah, happy to take this one first. And I think for all the interoperabilities, Cosmos ecosystem is definitely doing the top 1 or 2 in this whole ecosystem. So IBS ecosystem organically combines all the protocols and the different layers all together, from the beginning, and shares all the like securities and also some liquidity advantages with each other. So I think this one is definitely like you said before, it's not only about the asset transferring between different bridges, it's more about communicating. So we need more complicated information to be transferred within different ecosystem. And for this one, I think for now all the bridges logic is very straightforward. So how to the first stage we are wrap the tokens, how to wrap the tokens in different systems, and to doing the swaps and across the different chains. But for now, it's not stable and secure. So a more advanced way, we are getting like the wormhole. So it's more secured to communicate within the protocols. And in the next stage, I think it's better to might be a brand new logic for the ecosystem. So you can have a different nodes, running node systems within different ecosystems, and to let each native node system to help with each other to communicate. That's one way, but it's not confirmed yet. But I think we should expect a more new structure for all the bridges we've seen today, because it's kind of a new idea. Like I've seen the Connext before, and also the DevOS, the two protocols using the different ideas and logics to do all the bridges things, to share not only the asset but also the information like signatures and everything involved. And also, I think for the next step, we should expect a more structured way to do all the NFT related, because NFT playing a big role in all the ecosystem right now. And previously, we only see the GameFis and also the NFT profile images. It's not enough. And if we wanted to take advantage of NFT in further, so how to better bridge everything like this, and to using the similar standards in different systems to measure and do the monitor. I would say do the monitor and measure all the activities among different ecosystems. It's also another thing I think for the bridges need to think about. And yeah, I've seen the Twitters like Injective and also Uniswap using the wormholes collaborating each other before, and also the Cosmos and the Axelar. I think that's all the good solutions for now to doing all the bridges things, considering either security and also the scalabilities altogether. So I would expect these protocols to doing more advanced information transfers in the future. Yeah, that's almost that.
Yeah, I guess I agree with Mirza. Interoperability has been I guess pretty much the biggest area of security risk over the last year. I think something like 70% of the funds that were hacked in 2022 in crypto were lost in bridge hacks, which amounted to I think like over $2 billion worth of funds, which is a pretty big problem. So I think solving this is probably one of the most, if not the most, sort of critical kind of hard infrastructure problem for the space at large at the moment. I think it could be one of the biggest boons to the space once it's solved, or proven to be solved over a period of time. We are yet to make a bridge investment as a firm. We're excited about the kind of emerging different sort of trustless bridge designs beyond kind of IBC, really is kind of like the pioneer there. There are a lot of ZK bridge designs starting to emerge, which are quite exciting. We're excited about IBC potentially having a path to roll out more fully on Ethereum. We think that projects that have a core focus on interoperability are more interesting, more exciting in general. So, I mean, to that end, we think it's like really great that Injective has recently integrated Wormhole. We think that's a really big step forward for the project at large. And yeah, we're also I think the final thing just on interoperability, obviously being so core to the Cosmos ecosystem, we're kind of we're excited to see what interchain security can bring to the Cosmos space more broadly, and how that might catalyze the kind of the app chain thesis, and maybe de-risk some of the early stage project risk. But I'll leave that. I think that's coming up in a bit. So we'll speak about Cosmos later.
Yeah, I think interoperability and generally bridge infrastructure, message passing infrastructure, and all these like competing protocols, etc. It's actually really it's a critical piece of infra for the broader crypto space, and for generally any type of application to be truly valuable, they would need to go multi-chain in one way or another. Most applications, are exploring L2, etc. But obviously, we've seen a lot of kind of like cross L2 or general interop issues around L2 inherently, and I would say that over time you're going to see a lot of public failures, but the point of these competitions and the point of all these competing solutions is that when there is a winner and when there is a trusted and stable solution, which in theory it absolutely should. It's not it doesn't have like an extreme inherent security risk that can be addressed or resolved. It'll be likely one of the most important catalysts for the next stage of adoption and growth. And on top of that, basically interoperability is not just about bridging assets from one chain to another. Injective is one of the first to be able to pass and extremely well utilize arbitrary data, Oracle data across chains. And over time, you're going to see more and more of these adoptions, especially on the cross-chain composability and cross-chain interoperability plays that are going to be heavily adopting and utilizing the advanced infrastructures of all these chains out there, and to basically make sure that composability is not lost when you jump between chains. And on top of that, I would say one of the ways for ecosystems and users to kind of offset the bridge risk is first, let's start off from like ecosystem perspective, or from like a bridge builder perspective, is to being able to isolate risk and diversify the risk as much as possible, because for a general case, it's a massive honeypot for bridge solutions. If you have like a bidirectional bridge that is very well adopted, your asset is essentially all kind of congregated within that one single contract implementation or that one single set. That being said, like that can be heavily improved. It could be asset specific. It could be done in various different ways to make sure that the risk can be contained to a single type of asset, or it can be contained in diverse ways. And for ecosystems, it's about working with and integrating with as many solutions out there and as many standards out there as possible, to be able to make sure that this ecosystem is not over reliant on a single bridge in the long run. And obviously I would say like generally the current landscape of all the bridges out there, there's definitely not enough players essentially for a lot of the bidirectional channels, and they're always overly centralized on connections to Ethereum, to some of the largest chains out there. And I would say another really key point for ecosystem is that basically always monitoring, always parameterizing, and for Injective's case as a sector specific chain, always ensuring that the ecosystem developers and users are protected at all costs. And I think a lot of these projects building on Cosmos and a lot of these projects generally trying to be multi-chain would agree with this.
Thanks. Great. I think I'm going to shift gears a little bit and take some time to ask some specific questions to our panelists. I guess we can kick off with Will. So I know that Pantera, of course, has been partners with us since early 2020, I would say. Since then, since sort of leading our seed round, you guys also followed on a couple of times in later funding rounds. So what's sort of been your perspective on Injective as a whole? Why have you guys sort of chosen to partner with us all these years? And why do you sort of continue to be interested in what Injective has been building?
Yeah, absolutely. So, I think what kind of struck us immediately, back in 2020 about Injective was just the strength of the team. And we just really thought that, you had like a broad-based talent. They complemented each other really well. Crypto natives who know how to build, proven builders. And we just felt like you really knew what you're doing in the space. So that was a big positive for us. As venture investors, it's important to have kind of A+ teams. Second things that we've kind of been excited about, we think that Injective's done a couple of things that have been really, really exciting since we've invested. They've taken kind of the order book model from TradFi, improved on it by replacing the continuous double auction with frequent batch auctions, in ways that kind of the traditional financial system could never really do, given how entrenched trading processes are. For context, for anyone who's not familiar, the sort of FBA model allows the exchange to eliminate predatory front running by high frequency trading firms, and it also encourages greater risk taking by market makers, and sort of the provisioning of deeper liquidity, and so better price discovery and tighter spreads on exchanges. So that's really exciting. Other things that we've been excited about recently, we think the idea of automatic smart contract execution is very impressive. We're sort of blown away, really, that the Injective team has been innovating at such kind of a fundamental level on smart contract design in a very unique way. And we're really excited to see what kinds of features that could unlock for builders over the next year. Other DeFi primitives that the team has introduced, sort of binary options for prediction markets, negative maker fee support, also, are just a really exciting kind of like toolkit, I think, for builders out there to be working with and deploying into their projects. There are sort of more exciting integrations. I touched on this already a bit, but I think the wormhole integration is going to be really great, and kind of make the entire ecosystem a lot more appealing for kind of builders who are on other chains and thinking about moving over. Users, obviously, of course, who can move over much more easily to Injective now. And obviously, we think that the Astroport deployment which was a massively successful exchange on Terra, is a really good vote of confidence for the ecosystem, given that they chose Injective as their sort of first layer one, as their iteration of Astroport v2 post the Terra collapse. So I think I'll leave it at that for now.
Yeah, thank you. Appreciate it. I think I'll do the same for Johanna now. I think many people might not be super familiar with IDG in the Web3 space, but IDG famously is an early investor in a lot of unicorns that many of you know, such as Xiaomi and Tencent and Baidu. They're likely, if not the largest, one of the largest investors in all of Asia, with a really great footprint in the US as well. So I think Johanna will have a cool vantage point here, where she's, of course, been a very successful Web2 investor. Now she's sort of taken her talents and bringing it to Web3. So Johanna, sort of what parallels do you see between the two? And what do you think is different about venture investing in general, and what IDG is focused on in Web3 versus Web2?
Yeah, thanks for asking. And actually, IDG is pretty familiar with all the traditional investments in Web2, because actually it's been years. All the names you mentioned before, we are big shareholders of the team. And I would say the Web2 companies have some really, really successful investment experience, which we could learn from it for all the Web3 investment. It won't be 100% same with each other, but actually all the product design and also development and even the team management and operations experience is really, really important when we looking for a potential team and how do they gonna build for their team structures in the long term. It's really a good learning experience for everyone here. I think even for myself to learn about all the successful experiences within all the big investors within the IDG Capital. And for Web3, actually, we started looking at Web3 investment actually pretty early, back to 10 years ago, I would say, because we actually the big shareholders of Coinbase, KuCoin, and Ripple as well. So back then, I think our partners really have an idea that the blockchain and Web3 related technology would transform the whole world, starting from the financial products, but generally down to the everyone's customers' daily life, like applications, the way we're communicating, and on the social files. So it's a big chances for IDG Capital to grasp all the related opportunities and to invest our energies. So I think whenever we meet the potential team, IDG really could help with, for one thing, is maybe helping with some experiences we have before in the Web2 world. And even if you're building some down to the customers' portfolios or the protocols, we are able to provide some advice and even jump to the connection directly to the similar products we've seen in the Web2, and to share some advanced advice with each other and to learn with each other. And also, there is a good point for example, the GameFi. We wanted to know what exactly the game developers in the Web2 world are facing in these days, and how do the Web3 structures and the blockchain related, not only the financial structures, tokenizations, but also the way people share and storage on chain could solve the problems what we are facing in the daily life right now. So we have a direct connection with these two different areas together. So for IDG, we're actually open to all the different areas in Web3, and we are pretty flexible with the ticket size as well. So no matter the DeFi related, specified, and also the DID or the GameFi, we are open to talk with all the potential teams all the time. And we will try our best to see if we can help with other teams to either boost their ecosystem within Asia, because that's the stronger connection we had for IDG Capital. And also we could also try to doing some internal analysis for the protocols and also the product experience sharing within the team with the partners within IDG Capital. Yeah, I think that's pretty much I would share today.
That was fantastic. No, I think that's a great sort of segue into the last question. I think the conversation took longer than I expected, so I'll sort of skip a couple of questions and ask one that's probably on the minds of many. So all of your companies have sort of been in the space for many, many years now, and you guys have lived through multiple market cycles. Do you guys see any parallels between what's happening in the market today versus what happened in earlier market cycles, whether that be the earliest iteration closer to 2013 or later in 2018 and 2019? And what's different in this market cycle in terms of development focus and yeah.
Sure, yeah, happy to take that one first. So, I mean, I think sort of fairly obviously the biggest parallel is in, the pricing action that's occurred. But I think that is actually mostly where, for me at least, the parallels end. I discussed this internally with the team, with some of the members who have been around for a little bit longer than I have in the space. And we decided that one barometer was that if people are still showing up to Twitter Spaces, then that's already a lot better than some of the last ones.
Yeah.
But besides that, we think there's definitely better talent in the space in this cycle. There's real products, there's real usage. NFTs, DeFi, gaming. These are like real use cases which didn't really exist in their full form in previous cycles. It was more this kind of like this breakout technology, this really exciting, new primitive that people were working with, but no one really knew, what it was, where it was going to find its place in the world. And I think we're much closer to that today than we were, 4 or 6 or 8 years ago. So other things, I think, as we discussed, like a much clearer path towards kind of secure multi-chain interoperability, which I think is very important for the space. Scalability has been really built out across ecosystems. People are taking scalability very seriously. Those roadmaps have, been largely kind of people have kind of largely walked through them already. So other things, kind of developer traction, I think is still increasing. A lot of the developers that left in the last cycle were actually mostly part-time developers. So I think Electric Capital released a pretty good report on this, just kind of detailing how, price action comes and goes, but every time that there's a bull run, it brings in a lot more developers into the ecosystem. And then the number of developers that leave is sort of, it's a much smaller kind of percentage drop than the price action, might suggest it would be. So maybe it's kind of like a 5 to 10% drop per bull run, and a lot of that is actually kind of like part-time developers. So I think the final point is that the macro conditions are very different this time. Crypto's never had to face a recession before. Crypto's obviously become more correlated with macro recently, and I think a lot of the most recent kind of bear market was initially triggered by kind of macro triggers in kind of traditional finance markets. So I think it's important for people to be paying attention to macro more now if they're interested in kind of trading liquid cryptocurrencies, and also for just people building in the space who are interested in when the next bull run might come or bear market might be over. I think macro is going to be a really strong leading indicator for that.
So for this one, I think from the marketing side, no matter when the price jump to the very, very high point or jump to like Luna back to zero last year, it's always helped this ecosystem jump out of the circle and to let more people know what we're doing right now and all the news we're discussing these days. And besides that, I think previously all the cycles is kind of robust because all the competitions or the price fluctuations related with centralized finance more instead of decentralized or on-chain activities. So people have lower control of what's going on here and more rely on the public news and the publications or the marketing news that's being published from the big or the centralized finance organizations and institutions. But after 2020, after the DeFi summer is happening and all the GameFis, I think all the builders and developer here are more targeting to a specific goals right now, and everyone has a clear roadmap for themselves, the protocols and also the different angles on chain. They are knowing more clearly about what we wanted to build in the long term and what we want to achieve our goals. So in this way, for example, the security, we would definitely know how to use the transparency on chain to track the data or the scams account to protect ourselves, protect our funds within different protocols. And for the centralized finance, they are trying to figure out a way to let the users trust them to the way to manage all their monies they have. So I think all these things are coming to a consensus. So previously, only a last group of people who know what's going on here, and they are focusing on the tokens price jump up and down, and it's more like a money game. It's like a prediction market going up and down. But these days, it's more like a developing. It's really, really about how we're gonna build this world in a different way, and how we're gonna create a brand new market for ourselves, like permissionless creative financial products gonna coming out this year even more freely and or with transparency. So users win their rights to see what's going on into this market instead of just led by the big whales and institutions in the traditional market. So in this way, I would say in the next coming years or even in the longer term, the fluctuations still gonna come in up and down. That's how the market performs. It's normal, but we should have more faith and consensus towards a finalized goal that we are waiting for it. So it won't be easily to get down or sweep everyone out into this market. So I think that's a really promising thing for everyone here.
That's fantastic. Agreed on all points. I think, yeah, the conversation was great, and I think the hour passed by way faster than I imagined. But thank you to all three of our speakers, especially Johanna and Will, for joining us today. Definitely give both of them a follow. They have some great insights in general about the market and trends in Web3, trends in Web3 VC specifically as well. So, yeah. I'll see you guys next time. And also for the builders that might be in this chat, definitely make sure to register for the Injective Hackathon. I think whether it's a bull market or a bear market, it will always be a build market. So yeah, let's keep building. And thank you so much again to everyone for joining.
Appreciate it, guys.
Thank you. Appreciate it.
Thanks,
Cheers.
Mirza.
Bye, guys.
Bye.